Greetings, members, one and all of the Salivation Nation. A gold standard has to be a part of a monetary reset, according to an analyst. Let's explore. That's right. A new gold standard is coming, and it's going to be a part of this monetary reset, according to Jan Nieuwenhuis. Some people pronounce his name Jan, I've heard, or Jan Nieuwenhuis. But nonetheless, it's very interesting. But before we get to that, let's take a look about what gold is doing now. They're breaking down again for the second day. Gold has taken a dip, and silver a slight dip as well. A panic sell-off in equities, grains, and metals on Wednesday. Gold and silver broke hard. We talked about that in yesterday's video. In this article here, commentary from Todd Bubba Horowitz from Kitco. And they violated in closing below significant support. The new targets are no longer in play, and all rallies are meant to be sold. Platinum has been weak, but has not violated the critical support level yet. Part and parcel, probably because of the article we posted, or video I did the other day, talking about, how, platinum really could break out. I believe it very well could, considering its limited supply from around the world, and about the demand for the metal in coming green technologies. The selling should continue. There will be sharp rallies, which will be an opportunity to sell more based off the current price action. We could see gold and silver could accelerate through the next targets, 1850 December gold and 23 December silver. January platinum remains in a range between $860 and $900. Many will be trying to bottom pick these markets, which is a fool's game. Under the trend changes, there is no reason to be long the metals as a trader. Investors should not worry day to day in understanding that the selling will eventually end and the metals will be higher. And however, as a trader, we remain short. And for somebody like me who bought before this huge dip, I don't have any dry powder to take advantage of the dip right now. Wish I did. This is something that is unfortunate when you're a buyer and you run out of money to make a purchase. But nonetheless, part of the reason why for the decline today, well, a better than expected GDP. As I mentioned in previous videos as of late, the president has been touting a number that hasn't been published until now. He was saying anywhere between 25 and 35%. Well, it's on the upper end of that ratio. GDP booms. A 33.1% rate in the third quarter, which is better than expected, and better than the 32% estimates from a Dow Jones economist survey. And this is surge in business and residential investment, along with stronger consumer activity, helped the economy after its worst ever quarter last time, which was the second quarter here. Coming off the worst quarter in history, U.S. economy grew at its fastest pace ever in the third quarter as a nation battered by an unprecedented pandemic started to put itself back together, the Commerce Department reported Thursday. Third quarter gross domestic product, a measure of the total goods and services produced in the July to September period, expanded at a 33.1% annualized pace, according to the department's initial estimate for this period, as we're looking here from CNBC.com. The gain came after a 31.4% plunge in the second quarter and was better than the 32% estimate from economist survey by Dow Jones. The previous post-World War II record was a 67% burst in the first quarter of 1950. Markets reacted positively to the news, and Wall Street erasing a loss in the open and turning mostly positive, and gold prices reacted positively as well. Here we can see in this chart, going back to 1870, economic booms and busts. Interesting indeed. This is a fascinating table here. And it looks like these are recessions and great inflation we saw through the 70s and 80s. And booms there, I guess, would be this percent range from prior quarter. And we see a lot in the 40s and the 50s after World War II. Big movements here, and a lot less likely. But look at here, this little boom and then spike here, I guess, is what this is coming out of the pandemic period here. We don't have a recession line there that we're seeing. Well, you kind of see the COVID-19 recession there, but anyways, fascinating to see the movement of data there. It's obviously good news that the economy bounced back in the third quarter, says Eric Wienergrad, senior economist at Alliance Bernstein. Still a lot of work to do here in place of improvement. It's going to be slow. And this is on the back of the now a recent surge in coronavirus cases. I believe not only are cases rising now because of increased testing, but also because of just an increased number of people getting the virus now. We're running into virus fatigue. And now Germany and France are talking about lockdowns with this. And here we see the gross domestic product chart here in the course where it went straight down here in this recession, but now it's kind of trying to bounce back here, making some good movements. That is that V recovery that President Trump has been talking about, and it's there. However, notwithstanding, there's still a lot of people hurting, especially in the service industry, which is the hardest hit, and it's not recovered to the point that we like to see. Theaters are closing down, restaurants are closing down, a lot of businesses hurt. We got to get these back together. Hopefully, we will see this virus come to a close with some vaccine, or hope for a vaccine coming. And but nonetheless, that's where that is. And this is all goes back to this reset we've talked about, and it's being talked about too, because the wake of this is undeniable. Increased deficit and debt for central banks around the entire globe, all the major currencies and the like. And so this new gold standard that's coming, Jan Neuenhaus says it's got to be occurring as a way to discipline the monetary system, because people won't be fooled, I guess he's saying. We'll see here. Excessive monetary stimulus, a byproduct of undisciplined fiat money system, will create problems for our economy as well as financial distortions. And the long-term solution is a monetary reset, whereby economies move away from the system and readopt a gold standard, said Jan Neuenhaus, gold analyst at the Gold Observer. There are a lot of financial bubbles. There are excessive debt levels. Inequality is rising. You've got moral hazards. All of these side effects of a fiat money standard are not really what we want. And eventually, we get a lot of monetary instability. And I think then at that point, we have to get back to a gold standard, Neuenhaus told Kitco News. The transition from a current fiat monetary system to a gold standard has to first address the debt overhauling in our economy, Neuenhaus said. The main problem we have in the economy right now is a massive debt overhang, predominantly in the developed nations, government debt, but also corporate debt and private debt, just as very high. It's at record levels, he said. A potential gold standard could take several forms. There are several options for a gold standard. You have the classical gold standard, but you also have a gold price targeting by central banks, he said. If you get gold price targeting, the only thing the central banks would do is target the price of gold, and that would be their monetary policy. So there you go. A fixed price for gold would be one way to do it. A gold price targeting mechanism differs from a classical form of a gold standard, which would allow a direct conversion of fiat notes to gold. Currently, countries around the world are on a race to the bottom with devaluing their currencies, and Neuenhaus said that this is an attempt to raise inflation rates and indirectly reduce the value of debt still in the economy. But make no mistake, you're looking where the gold price is now, well above $1,850, $1,850 an ounce. That shows you what's going on with our currencies out there and and records for other currencies around the world. And some people think this may not be possible, but Jan argues that gold is basically evenly distributed among central banks and around the world. And so it's feasible given how gold is distributed evenly around the world. And And he does make a good point there, although I think some nations would argue with him that some, like maybe Canada may be one of those nations that might be arguing with him as they've sold all their gold. And really, in a sense, the United Kingdom as well too sold a lot of their gold when Gordon Brown was prime minister. Currently, countries around the world, again, as I talked about, devaluing their currencies, and devaluing against other nations can be beneficial sometimes, but what they actually want is in the US and in Europe, and also in Japan, is consumer price inflation, and preferably with interest rates at or below zero. Deeply negative real interest rates would wash away and lower the debt burden, he said. On silver, Neuenhow said that the white metal should be considered a currency more than a commodity due to its high stock-to-flow ratio, and therefore analyzing supply and demand is not useful for predicting prices. That's an interesting statement, because right now it is viewed much more as a commodity, I think, than as a currency, or as money. It's not a currency at all right now, but he's saying it should be based off high stock-to-flow ratio. But why is that? It's being utilized in industry more. So I kind of don't understand where he's coming from on that particular target. But his interesting statement about gold is fascinating. Central bankers use it, nations use it, and it's used as money, as currency between these nations. And it is something indeed. It is a unique metal, uniquely qualified to be a basis. But will we get there? Will it be set and utilized? No. I think it's something that's probably going to be something more as a last resort. But it could be something to be put in place as an emergency factor in this reset. But I believe what's going to be the foundation for that is some sort of electronic ledger, something like blockchain or Hashgraph or something like that, to be able to utilize and move money around very quickly. I think that's part of what I understand for this monetary reset. But this analyst believes that gold must be a part of it, and you will find out. And one other part of this too is for all those who are into the Gesera Nasera, or Nasser, or however you say it, this acronym about basically revaluing debt, wiping out debt, and giving money. In China, there is a digital currency that's being dropped from a helicopter. These certificates that have, basically this sort of digital currency that can be utilized in a region in China. And several have shared that with me, and that is something that could be the future for other nations. China is moving in that direction. It's in a way it's a bit scary, because when you have a total digital currency, well, you're tracked. And that's much closer to some one world currency. And you can have different currencies out there that essentially mask what is the global blockchain, or the global digital ledger. And that is why I am all the more bullish on gold and silver. And I believe that if that does occur, you will see an underground system where you may find old dollars, old chains being utilized and being taken for transactions outside of the system, whatever that system will be. Make no mistake, whatever monetary reset there is, will become much more global and much more trackable and digitized in this new monetary reset. We'll find out what happens, and even if gold is a part of this new gold standard, they are going to utilize that technology much more than you think, and it will be tracked for sure. Transactions tracked, and money can be taken away very, very quickly in these systems. And really it can now. If you have money in the bank, more than likely you may not have the cash to be able to back up that money that's in the bank. It's all ones and zeros and can be wiped out very quickly. It's a clerical error. That's what part of me worries about that with my own bank account. But nonetheless, there it is. So post your thoughts in the comment section below. This new gold standard. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.